Assalamu alaikum friends, welcome to AFM 14 days revision crash course for September 2021. Starting with day 1, today's topic is role and responsibility of the financial manager. So I guarantee you that 80 to 90% of your theory parts of AFM will be covered in this video. So make sure that you watch this video till the end to maximize your chances of passing, especially in writing theory parts, writing descriptive answers. No calculations, it's fully theory. What are the areas that you need to focus on in short span of time? So let's start. What are the topics that we are going to cover in this video? We are going to cover 5 things. Starting with past exam history, we are going to go through the past exam history. We are not spotting or we are not predicting that these are the questions we are going to get, but let's have an overview. What are the types of questions that frequently comes in the exam? Then we are going to introduce you to the role of the financial manager and what are their some responsibilities and all. Number 3, overview of roles and responsibilities. Then we are going to go through the Treasury Department because this is also an area where a theory question is asked. Then we are going to end it with assessing the impact of the financial manager's decision. We know that as a financial manager, they have to make many decisions in the organization and their decision has an impact on several areas. So that you need to assess. So let's start with the past exam history. I have given some topics from the first section, which is role of financial advisor. So you can see the date starting from June 2017 and ending till December 2019. I didn't have the latest one, I didn't upload it, but I have taken till 2019. Okay. The other two columns for 2020 and 21, you guys can add it. Okay. So starting with ethical considerations. Ethical considerations have come 3 times, right? And discussion of strategic issues, it never came. Recently it didn't come. Okay, I don't know about 2020 and 21, so make sure that you guys go through it and see. Discussion of financial issues, discussion of treasury function. So treasury function, do you see it came 5 times? That shows that treasury function is very important and you need to go through this. What are their roles, what are their responsibilities, what are the advantages of having centralized and decentralized treasury function and all. Okay, and ethical consideration also, ethics, a question on ethics also, you will be getting it. And stakeholder discussion, again very important topic. Then environmental issues and sustainability, not in the past 2 years. What about behavioral finance? It came once in September 2018, but behavioral finance, let me tell you, it's also a very important area. So now let's start with introduction. What is the main primary role or responsibility of the financial manager? It is the maximization of shareholders wealth. That is the prime responsibility of the financial manager. There are so many other roles and responsibilities that financial manager should do, but the main one is they have to maximize the shareholders wealth. Okay, so whatever the activities they are taking, whether it is risk management, whether it is reconstruction, whether it is acquisition and merger, the main goal is shareholders wealth should be maximized. Okay, so whatever decisions you take, whether to go for acquisition, whether to restructure, whether to hedge using the derivatives that is given to you, all things you have to take care of one thing, whether the shareholders wealth is maximized or not. That is the main fundamental principle of financial management. Financial management is built on that one principle. But apart from that, we have some other roles and responsibilities of the financial manager. What are they? They are risk management. Yes, we have a whole new section chapter on risk management. Exchange rate risk, interest rate risk. So these 2 types of risk, they will be managed by whom? Financial manager. Next, efficient and effective use of resources. Then we have financial planning and control, communication with stakeholders, distribution and retentions, raising finance and minimizing the cost of capital. We have a whole new chapter on cost of capital, where you need to calculate how to calculate cost of capital, right? So the objective of the financial manager is they always want to minimize the cost of capital. Okay, and raising finance and minimizing cost of capital. If a company is facing short of cash, how to raise the finance, all these decisions will be taken by the financial manager. How much cash that has to be raised, from what sources the cash has to be taken, whether they have to go for the bank loan or equity shares or an overdraft. All those decisions will be taken by whom? Financial manager in the organization. Investment selection and capital resource allocation. They select the investment, whether they have to invest in that project or not, based on net present value. If they get positive net present value, they invest it, otherwise they don't. And then Treasury Department. So Treasury Department, what do they do? Some of the roles or responsibilities of the Treasury Departments are short-term management of resources. They manage resources in the short term, like cash management. They manage short-term cash management. For example, whenever a lending, borrowing is required, okay, it is the Treasury Department who has to take care of the company's cash. Whether they have any shortage of cash. If they have shortage of cash, whom are they going to borrow from? How much they need to borrow? Are they in capacity? Um, do they have their liquidity position? You have to access their company's liquidity position to see whether they are able to pay back their debtors or not. Then currency management. It is done by treasury departments. We manage risk and all by hedging, using derivatives and all. All these are done by treasury departments. Next, long-term maximization of shareholders' wealth is also the role of treasury department. Like raising long-term finance. It could be equity, it could be long-term debt, right? So managing that equity and debt, it is the role of treasury department. Then we have investment decisions, all investment decisions, which projects to invest on. Okay. Whether they have to go for the acquisitions or not, review of acquisition or divestment. Sometimes they might have to sell it off and defense round takeover. All these are dealt by treasury departments. Dividend policy. What is the dividend? How are they going to pay the dividend? Are they going to pay consistent dividend? Are they going to increase the dividend? So all this will be considered in detail when we go through the dividend policy. But for now, just know that these are the roles of the Treasury Department. Risk management. Yes. Assessing risk exposure. There are two types of risk that they need to manage. One is currency risk. The other one is interest rate risk. Okay. We are going to study both in detail. Next, we have Treasury Department. Those functions that are specific to international groups. When you are trading outside border, then Treasury Departments has certain functions, and these functions are during those times when they trade outside the border. Internationally they trade. For example, setting the transfer price to reduce the overall tax bill. When they are setting the transfer price, they have to set the transfer price. For example, the parent to the subsidiary or the subsidiary to the parent. The transfer price should be set in such a way that the overall tax, the tax that they have to pay here and the tax that they have to pay overseas are reduced. Next, deciding the current exposure policies and procedures. Sorry, the currency exposure policies and procedures. Okay, what is the risk of the currency? How are they going to hedge it? What are the derivatives they are going to use? Are they going to go for options? Are they going to go for swaps? Treasury Department will decide this. Transferring of cash across international borders. How much of cash? To whom they have to transfer? Who will be handling this cash? Treasury Department decides. Devising investment strategies. Okay. From the range of international money markets and international marketable securities. Netting and matching currency obligations. For example, you have a foreign receipt and a foreign payment, both are in the same currency. Okay, the currency is same, but you have a receipt as well as a payment. So what can you do? You net it off against each other. That is known as netting. The payment and the receipt, if you have in the same currency, net it off. And matching the currency obligations. For example, if you are having an asset in one currency, make sure that if you are going to borrow, or if you, okay, If you're going to borrow, you have to borrow in the same currency as your asset, so that risk is reduced. That is known as matching currency obligations, keeping your assets and liabilities in the same currency. Last, this is the last section, assessing the impact of the financial manager's decision. Very important, very important. In your exam, there will be a question which will be asking you what is the impact of this decision, what is the impact of that decision. Okay, in the exam you may be asked to assess this few things. These are the 5 things that you may be asked. For example, what is the strategic impact of the financial manager's decision? What is the financial impact? What is the regulatory impact? What is the ethical impact? What is the environmental impact of the financial manager's decision? Now we are going to go in detail through all these 5 impacts. Okay, what are some key considerations relating to the 5 impacts? If it's a strategic impact, okay, these are the things that you need to consider. Does the new investment project help to enhance the firm's competitive advantage? For example, let's say you are doing a question on you're finding a net present value, okay, and you are asked this question whether to go ahead with that project or not. So in that case, you need to write this whether that project will help you to enhance your competitive advantage or not. If not, don't accept that project. Otherwise, you can go ahead with the project. That is known as strategic impact. Strategic impact means something that will affect in your, it's a long-term impact. Okay, because when you're investing in a new project, it's not a short-term decision, it's a long-term decision. So it is known as strategic impact. Next, fit with the environment. Does it fit with the environment? For example, if you are going with a acquisition, you are acquiring a company. Does it fit with the environment? Does it fit with your overall strategy or your objective that you have for your company? Next, use of resources. Then stakeholder reactions, how your stakeholders are going to react. Impact on risk. So when it's a strategic impact, you have to think about all those 5 things. What could be the impact on the risk, what the stakeholders might think. Next, we are moving towards financial impact. Financial impact is usually asked, strategic and financial impact, this too. But financial impact definitely. It could be asked under any question. For example, it could be asked under your risk management, under your investment appraisal, under your reconstruction question. So this financial impact, you have to be prepared from all the angles. It could be asked from anything. So if a financial impact question is asked, what are the things that you need to answer? You need to see what is the impact on the share price. Something to do with finance, numbers, okay? So what is the impact on the share price? Or you could just say what are the impact on the financial statements of that decision, how the financial statements will change, what is the impact on the profit and loss account, what is the impact on the statement of financial position, are your asset going up, are your profit going up, losses are increasing, all those things. Okay, whatever the elements that goes in the financial statements, how it is impacting those elements that you have to see. Impact on the cost of capital, this is a question asked very frequently. I will not say very frequently, I would say 99% it's asked. What is the impact on the cost of capital if an investment appraisal question is asked? And where you have to calculate cost of capital. They will definitely ask a question, what is the impact on cost of capital? What is the impact on cost of capital means whether it increased or decreased from your decision. Because definitely we want to reduce the cost of capital, not increase. Why? Because the financial managers, what is his prime objective? Maximization of shareholders' wealth. So if cost of capital reduces only, shareholders' wealth will be maximized. That's why whatever decisions you take, ultimate your goal has to be that cost of capital should reduce. Then only shareholders' wealth maximization is possible. Regulatory impact. This is relating to regulations and all. What type of industry the firm operates in. Whether the firm is listed or not. Because if it's listed, there are so many regulations and laws that the company has to follow. Otherwise, they are more simpler. Then, coming to ethical impact. You have to think from the ethical perspective. Okay. For example, how the company is treating the stakeholders. Are they clear? Are they transparent in their transactions, in their treatment to their stakeholders? All those things will be given in the case study. From the case study, you have to pick up when you are told to write. environmental impact. Because definitely, even though AFM looks like that is number crunching, it's not all about numbers, numbers, numbers. That's what most of the students have this misconception, that it's all about numbers, numbers. So I am good with numbers. I will somehow, pass. It's not like that. You need to balance it with descriptive answers. So if you don't know what to write, how are you going to get the marks? You will somehow get the marks through numbers and all, calculations and all. What about the theory part? You need to work out on that as well. So the environmental impact, sustainable development, okay, pollution, social and cultural factors, all those things. So now, finally, from exams point of view, okay, how is this topic viewed from the exams point of view? This topic as a standalone question does not come. That means this question comes as a part of a question. Okay, whatever we have gone through from the beginning till the end, it comes as a part of a question. It does not come as a full question. Okay, for example, they will not ask a question asking for 10-15 marks what is the environmental impact. Okay, they will never ask you that question. But yes, they might tell you, okay, calculate the net present value of the company, or calculate the acquisition, the value of the company after acquisition. What is the impact on the cost of the capital? Okay, so like this they can ask. So cost of capital is a part of financial impact. Okay, next, how are you going to use this in your answer, in your exam? You can use the subheadings, for example, ethical impact, regulatory impact, all this impact. You can use this to structure your answer when you are told in the exam to comment on other factors that has to be considered, right? If they tell you that comment on this thing, other factors to be considered, then you can talk about all this factor: ethical, environmental, regulatory, financial, strategic. Okay, after performing a calculation in an earlier part of a question, for example, part A, you had to calculate a calculation. Part B is now asking you to consider other factors apart from financial factor. That time you should be in a position to give all this factor. Don't ask me which factor. It depends on the scenario that you have been given. In the scenario, if they give you things about pollution, social and cultural factor, that means they are talking about environmental impact. If they're talking about stakeholders, the treatment of stakeholders, then they're talking about ethical impact. That's like that. Okay, so that's it, right? That's it for this topic you need to know. And tomorrow I'll be discussing the most important topic. What is it? Any guess? Yes, it's investment appraisal, guys. It's investment appraisal, very important topic. All your cost of capital, net present value, adjusted present value will be covered tomorrow. So see you tomorrow with lots of new things and lots of questions. Till then, take care.